Hey, the Dukes are trying to corner the market.
They know something. I can feel it.
Let's get in on it.
Moving! Not yet. Almost.
140!
Hey, Minneapolis. Now. South on an April of 142!
That's not right. How can the price be going down?
Something's wrong. Where's Wilson?
What are they doing here?
They're selling, Mortimer.
Well, that's ridiculous. Unless that crop report... God help us! I told you we shouldn't have come in and everything you...
Hello everyone and welcome. Thank you so much for clicking on this video from the Cheapo Dad. In today's video, I'm going to tell you exactly how I made over 300% profit on AMC stock. Make sure to stay tuned till the end of the video because I'm going to give you a step-by-step breakdown of exactly how I did it. We start right now. Hey everyone, if you would like to be a member of the Cheapo Elite and help the channel, then Webull took an amazing offer and made it even better. Right now, they're offering 4 free stocks. Yes, 4 free stocks with the chance for some of those to be Starbucks, Google, Facebook, and others just for opening an account. You get 2 stocks when you open the account, an additional 2 stocks when you fund the account with at least $100. The value of those stocks together would be at least $21, representing at least a minimum of a 21% return on your $100. Talk about not leaving money on the table. So full disclosure, I actually used to be a stockbroker for a large brokerage called Charles Schwab. I did that for 2 years. So I do have a little bit of knowledge of financial markets and complex investment tools like options and things like that. Before I get into everything, let me give you just a little bit of context here. So, in the news recently, we've heard about the frenzy with GameStop and Wall Street bets and how they've pumped the price of GameStop to ridiculous heights. Basically, GameStop was the target of a Reddit group called Wall Street Bets, who felt that a lot of people in the market, specifically hedge fund managers, were too aggressive on the price of GameStop. It was very, very low, and I think you could argue that it was priced too low. So the people in this Reddit group basically forced the price of the stock up, and I'm not going to get too technical for you, but here's the basic synopsis of it. The price of GameStop was one of the most heavily shorted stocks in the market. When someone shorts a stock, they basically borrow a stock from someone and they pay them a interest, and the interest on short stocks can be pretty high, and then they go and sell that stock at a certain price with the hope and the thought that the price of that stock will go down. When that happens, they go and they sell the stock immediately, and then later on, say call it 30 days or whatever, they have to buy the share of the stock back in order to return it. So just as an example, let's say I bought a stock in Netflix, and this is just really, really round basic numbers. Let's say I bought that stock, I wanted to short Netflix stock. So I went to an investor who holds the shares of Netflix, and I say, hey, can I borrow this share of your Netflix stock and I'll pay you 5% interest? It's usually a lot higher than that, but whatever. They say, yeah, you can have it for 30 days. I want 5% interest on the value at X whatever price. You say, okay, thanks. I go and then I take Netflix stock and I sell it to an investor for $10. Okay, I get to keep that money immediately. Now, after the 30 days, though, I have to return the stock to the owner, and let's say the stock goes down to $5. And I say, okay, so I go to the market and then I buy the shares of Netflix for $5 to give it back to the owner, right? So I've made $5. I get to keep that difference. That's what short sellers do. It's highly, highly risky. The reason why is because there is no limit to the ceiling of how high a stock can go. Your profits are limited into that it can go down to zero, but it can go up as high as anything. And this is sort of a worst case scenario for those hedge fund managers. So what happened is the people in this Reddit group went out and they bought shares of the stock. They forced the price of the stock up. The hedge funds managers who were short then had to go into the market and purchase shares of the stock because it was getting too high, and they had to do what's called covering their shorts or covering their losses because they don't want to get too high. But them going in and buying shares forced the price up even higher, and those Reddit users are not selling the stock. So right now the stock was at an all-time high of, at the time of this recording, it was somewhere around $300. But if you look at the fundamentals of it, and I do think that GameStop was priced too low, but they're also, in my opinion, and again, just quick disclaimer here, I am just a guy on the internet. Don't be a mark and go out and take investment advice from some random person and then lose money. But the price, in my opinion, is way, way, way too high now because the fundamentals of the company haven't changed. I just saw an article the other day that the stores at GameStop, for the most part, are still empty. Yeah, we had the upcycle of the new consoles, the PlayStation 5s and the new Xboxes, but overall, they're a brick and mortar company. They have a lot of expenses, and they're definitely a company that can be profitable, but $300 a share is a little bit rich for my blood. Getting to AMC, they ended up getting caught in some of this, and they also had some positive news. But to go back now, my initial investment thesis in AMC was similar to what was happening to GameStop. I felt that the prices were way, way, way too low. I started buying shares, just a little bit. I'm not talking about life-changing money here, but a little bit of money here and there. I started buying them in April of 2020. And it was a very highly speculative play on my part. I had calculated roughly odds of 50%. 50% they go bankrupt, 50% they will stay open. If they stay open, I knew I would be able to make a profit because the price was just way too low at certain points. News recently came out that AMC was able to make a deal and not have to file for bankruptcy. So that pushed up the stock, but also that same Reddit group were also talking about AMC, so that really pushed it up. And I wasn't paying too much attention. Generally, I'm a long investor, which means I purchase a stock with the intention of holding it for long term. And I looked, and the price was at my exit price. So I had an exit price of somewhere between $10 and $15, meaning when the company reached $10 to $15, at that point I would take out my profit because that's what I felt it was going to be valued at. Because while I think the movie theaters were too heavily shorted and investors were too rough on them, streaming is here to stay, and it's going to have an effect on their business. However, there still will be a market and an appetite for movie theaters. I am one of those people. I love going to the movies, so I knew that there was still potential there. However, with this recent news that came out between them not having to file bankruptcy and this craziness with the Reddit group, the stock jumped up to around my target exit price, which was around $13 a share. Because remember, my exit was going to be between $10 and $15. So, in my opinion, that price is artificially high right now because of people are high on the bankruptcy, not filing bankruptcy, and this business with the Wall Street Bets Reddit group. They haven't been able to come back yet, right? People still aren't going to the movie theaters. I expected this to be roughly a 3 to 4 year time horizon where I expected to pull my money out and I expected to invest in it. However, when this happened, I knew I immediately needed to take my profits. And you know what? there could be come a time. I think there'll come a time where when this settles down, then the price can go down again. And if it does, I'll go back in. But here's a breakdown of exactly how I did it. So I first bought shares of GameStop starting in April 2020. And I bought them sporadically. Like I said, this wasn't a whole bunch of money. I'll put my spreadsheet on the screen that I made here. But started in April of 2020, and the last purchase was actually January 6th of 2021 this year. And I purchased those shares anywhere from as low as roughly $2 a share to as high as $5 a share. In total, I invested $171.05 in AMC stock between Robinhood and Webull. Don't forget to get your 4 free stocks from Webull. And then, so I sold out this past Friday, I believe that, so that would have been, I believe the 29th of January. I sold in total from my $171.05, I sold it for a total of $575.19, or a profit of $404.14, or put another way, 336% is how much I made on that AMC stock. So now, before people in the comments and Mark start freaking out, like, oh, well, wait a minute though, but you held it for less than a year, so you're gonna have to pay short-term capital gains and whatever. I am aware, I understand that, but there's still plenty of money that I'm gonna be able to put in my pocket for this. So that's how I did it. Not too complicated. Like I said before, if it comes down, I'll be willing to go back in again. I'll be making other videos in the future about other stock plays that I've done. I dabble a little bit here and there. But this is one day where I can say I didn't leave any money on the table. Okay, that's going to do it for this one, everyone. Thank you so much again for watching the video. Please, for the love of God, if you liked this video and you like this type of content, please subscribe to the channel. Please share the video with someone. I'm still trying to get that street cred with the YouTube algorithm, and it's not happening. I'm still trying to get that meeting with the YouTube algorithm, and they're not having it. So please help me out. Share the video. Always, don't forget, don't leave money on the table, my friends. I'll see you next time.